Hello and welcome to this episode of Focus On. I'm Kiamogetse Mosepele. Despite many challenges, African economies are still expected to continue growing, with urbanization, technological advancement, investment in human capital, and innovation some of the key drivers towards seeing this growth. Today we put the focus on Africa's growth trajectory. Joining me for more is Bill Blackie. He is the Chief Executive Officer for Business and Commercial Banking at Standard Bank. So a number of high-ranking executives from the bank are here, meaning their time is a worthy investment today, right? What are the main aims for today's conference, and what are some of the things that the bank would like to achieve?
Kia, thank you. It's wonderful to talk to you and your visitors today, and your viewers today. Here, there is a substantive presence by Standard Bank at this conference. And the primary purpose of that is to say that we believe that SMEs, so small, medium, and family-owned businesses, really are very important for the future of the growth of Africa. And so we've pulled this conference together, one, to bring us together as a leadership team, but two, to bring together leaders, business leaders, from both South Africa and the rest of the continent, to be having a dialogue around how can we support them better into the future.
And another point, what are some of the action items that are here so that it's a conference that actually leads to impact and not just a few sessions from high-level executives speaking about change, but what are some of the ways change will be enacted by today's event?
Kia, the important point is that this is an infrastructure that we've built as a bank already. So we have real presence in 20 African countries. We have branch presence, we have head office presence. We can do both local currency and hard currency for customers. We've got the capacity to support them with their local and international liquidity needs. So this is very much about bringing people together and focusing on how they can work together and understand each other's opportunities. There's strong entrepreneurs from West Africa, SADC, East Africa, all who have an interest in growing on the continent. And so part of this is about facilitating those engagements between each other.
And earlier you did touch on the outlook for growth within Africa's economic trajectory. Just let us know, what are some of the primary drivers that are seeing a positive front or influencing that change that you're speaking of?
So there's so many factors for growth because sub-Saharan Africa is so multifaceted. But some of the key themes, of course, is the strong population and strong population growth that exists in Africa, new sources of energy that are coming into Africa consistently, be that finding of new sources of traditional energy or renewable energy that we're relying on now. The reduction of trade barriers, they're a huge part of facilitating the growth of Africa and Africa regions. The improvement of infrastructure. Every country I go to on a consistent basis, there's improvement in trades and trade ports, improvement in roads, improvement in air infrastructure, the airports, etc. Each one of these incremental benefits helps us each day.
Mm-mm. And you also spoke about removing trade barriers. I'm really interested in terms of the adoption of, regional trade agreements such as the AfCFTA. How important is that in terms of facilitating the growth that you spoke about, as well as bolstering Africa's economic prospects?
So we really believe in the importance of the African Continental Free Trade Agreement. We think it's a brilliant initiative, led by multi-governments, of course, as they bring this together. But the reduction of those trade barriers amongst African countries is very, very important to stimulate local trade. What would be interesting for your viewers to understand is that actually the biggest block of trade that we support in Standard Bank today is actually the intra-African trade, as opposed to Africa to Europe or Africa to the US or Africa to China. And that's a big shift from what it was historically.
And also, I'd like to circle back, as you mentioned, Africa's population distribution. We are known as a continent for a high youth dividend. I'm just interested from the bank's perspective, how crucial is job creation and skills development in terms of ensuring that this youth dividend that we have can actively contribute to the economy?
Yeah, that brings us to the heart in many respects of why we have this conference and what are we doing. is that we know in many of the developed economies, the endowment of small, medium, and family-owned businesses is what is the primary employer and creates significant stability in those economies. And so we really do think it's important to be stimulating the core of the economy for the future.
And lastly, I'd just like to speak on investment climate within Africa compared to other regions. What are some of the improvements that are needed within this region? Also taking into context the need for power within the continent, and as you know, there are shifts towards more renewable sources of energy. Where does this place Africa?
You raise such an important point, Kia. You know, ultimately, energy is growth, and you need energy in one form or another to stimulate growth. In that context, we're a firm believer that we must be allowing Africa to unlock all of its sources of energy, be that traditional energy or renewable energy. We're a very significant investor in renewable energy as a group, and in fact have set commitments of 250 billion rand worth of investment in renewable energy over the future. So this is a very important part of making sure that we can get the energy into Africa or unlock the energy within Africa to stimulate growth.
Prof, thank you so much for joining us. You come off a panel just touching on increasing intra-African trade. Just your experience of the conference today, what are the key messages that you have received, but more so also some of the key messages you'd like to see being delivered as well?
Yeah, thanks very much. I mean, one of the things that's very clear is, firstly, that intra-African trade as a share of Africa's GDP is much, much lower in sub-Saharan Africa or even Africa as a whole relative to, say, Asia, other developing country regions. So we have some way to go in terms of increasing the quantum and value of intra-African trade. That's the first key lesson. The second key lesson is to build a process of economic development to increase the complexity, what I call the economic complexity of African economies. Intra-African trade is absolutely essential. The Asians that have built strong economies were able to do so on the back of intra-regional trade. That's often underappreciated. So instead of trading, Vietnam trading with the US, which is important, it's Vietnam trading with its neighbors that has actually seen its growth and development trajectory moving forward speedily relative to other countries.
And I can agree that it is important while we aim for the growth of African economies to ensure that the money that we make stays within our borders and doesn't always do capital flight as it will. But I'd just like for you to tell us, what would that take in terms of having our own homegrown products, not only just circulating within the country within which it's produced, but our neighboring countries as well? What would that look like?
Yeah, so I think what's important is you do need trade with other countries. So as much as one does want homegrown products, it's a fine balance between saying, okay, let's put a protectionist wall around the country and prevent other commodities come in. Because it's not just about commodities coming in, it's also about knowledge spillovers, investors coming in. Knowledge spillovers is basically sharing the skills and know-how of other countries. That then allows us to actually produce and export our own products. So it's a fine balance between making sure we have strong, locally grown, dominant industries as opposed to purely protectionist firms which block out foreign, perhaps cheaper, better quality products. So I think that's the fine balance you want. And trade will facilitate that as long as it's carefully managed in terms of complementary interventions.
And just in terms of the policy frameworks that are centered on achieving the increased intra-African trade numbers where you would like to see them, what are your thoughts on the progress that the AFCFTA is making? Would you say the real-time progress is sufficient, or would you like to see a spur in terms of realizing all of those items and seeing them in real time?
Yeah, so I think, so the Standard Bank's Africa Trade Barometer is a really useful litmus test, right, and indicator for how firms. So that's really important. So, because for the AFCFTA, their target market is firms that are exporting. That's who their real client base is. And if you look at the data from the trade barometer from Standard Bank, of these 2,600 firms in 10 countries, what you do find effectively is 2022, only 14% of those firms had actually even heard of the AFCFTA. Yes, that number is now increased dramatically to 48%, but looked at it differently, basically less than half of these 2,500 firms that are traders in Africa haven't heard of the AFCFTA. So I think their first order of business is actually to spread the word to their client base and to start engaging with their client base on real optionality in terms of increasing intra-African trade.
Mm-hmm. And I'd also just like to touch on government intervention and the need for political will. What are some of the ways African governments can assist towards reaching that inter-African trade or surpassing the barriers that stand towards increasing Africa's market share within that space?
Yes, so a lot of the evidence, in fact, concluded by the World Bank in a 20-country study over a few decades, shows that trade will reduce poverty in Africa, conditional on three key factors. The first is financial sector development, and that means that you need a well-developed financial market for financial transactions to occur. The measure is credit to GDP ratio, and as long as extension of domestic credit to GDP is above 15%, you have what we call the basis, the financial basis, the financial spine to actually launch trade. But the second is education. You need a workforce that is relatively well educated. If you have more than half of the population that have at least have secondary education of a certain quality, that's critical for trade. The third is governance. Investors, traders, firms, domestic and foreign, want an environment that is certain, want rule of law that works, wants custom regulations that are fair, that are transparent. They want non-tariff barriers that are not too high. So the governance framework is absolutely critical. The final one, which isn't reflected on in the study, which I think is critical, is infrastructure. So you need functioning roads, ports, rail. You need water infrastructure, energy infrastructure. You need telecommunications. In the Africa Trade Barometer, the score out of 10, a score out of 5, which is 5 out of 5 is a perfectly good infrastructure. On average, across the 2,600 firms, the only infrastructure that was above 2.5 that passed was telecoms. Everything else was a fail. So simply put, 2,600 firms on average said that every single part of infrastructure in Africa, except for telecoms, was reported as a fail. Absolutely critical for trade. So I think those sort of 3+1 factors are critical for encouraging intra-African trade.
And that's how we wrap up this episode of Focus on some of the key drivers steering Africa towards its economic horizon. From me, Kamkhatso Mosepele, it's goodbye for now.